Hi everyone. I'm trying not to be too long-winded today, but lately I have been just because this rally is shaping up. Or I still can't say that word. Wow, after almost 20 years. This rally is shaping up to be very, very comical. So I want to go ahead and go over that. The Nasdaq was able to rally a very impressive 1.3% today. However, once again, where was the volume? Same trend that's been apparent for about 6 years. Well, really 5 of the 6 years. 2013 was the anomaly of it all. But here we are again, rallying on low volume, and it's quite comical. We still have not eclipsed the highs of the day at 41.85, 41.83 area of the ninth and 10th. And until we do, I'm still going to be bearish on this index. And the same thing goes with the Russell 2000. Until we can take out the 50-day moving average, I'm still very bearish on this index. The S&P 500 and Dow Jones Industrial Average is obviously a different thing. I'm extremely neutral to bullish on the Dow Jones S&P 500. However, with the way that they're set up and moving on low volume, I lean more neutral than bullish. But I'll ride the Dow Jones Industrial stocks up because they're the only stocks moving. I mean, my scans tonight. You want to talk about the epitome of an oversold bounce for 3 days in a row? Actually, it's just been nonstop straight up on no volume. Now, yesterday we began to sell off on huge volume, and we reverse and close higher with big volume at the end of the day, and that gave us a big volume day overall. So, I'm still not sure what to make of the 15th tax day. So I'm going to go ahead and just assume whenever I look at the New York Stock Exchange that volume was lame, and on 3 days we have below average volume on a 3-day running 50-day moving average basis. So the New York Stock Exchange volume is still overall lame. Nasdaq volume to me is overall lame. And in my scans, while I do have an EFII that shows up, an FNSR that shows up, basically I'm dealing with New York Stock Exchange stocks like PXD, OAS, JLL, KIM, GT, what was it? Y. I got one in Y. T, AT&T, MRO, GGP. So you can just see it's basically all New York Stock Exchange names. No matter where I go, it's NYSE names. I really don't have a whole lot bullish. I'm watching the Tesla, seeing maybe if it can rotate into Tesla. Priceline. I just showed Priceline first, then Tesla. Whoops. Facebook, Twitter. We'll see if we can continue to rotate in these names. See if the King IPO can hold. S-Fun, watching that one. Bitta, watching that one. Google, watching Google. Yelp, watching Yelp. YY, QWho, watching these. So we'll see if they can take back their leadership. But if they can't, and another round of selling hits those stocks with the already churning distribution-like action that we're already getting in the Google, Priceline, Facebooks, and Teslas, I am hammering the hell out of this market on the short side, and I expect a bloodbath. Because when you have bullishness near all-time highs on the Investors Intelligence Survey, bearishness at all-time lows at pre-1987 stock market crash levels, along with a VIX that couldn't even get to the old January $20 area on this most recent sell-off, with biotech stocks getting crushed, signaling that momentum is dead in that sector, and margin debt at record levels. Don't have the ability to throw the chart up here. I should have had that prepared beforehand. I made the video. I know, right? But it's just absolutely insane for me to see how too much price upside action can be made here without a significant downtrend. So I'm going to continue to hold on to my short positions, but I'm going to be very systematic about it. SPXU, I'm going to take off another 25%. It's closing below the 50, 20, and 10-day moving average, but still, I'm not going to sell another half till it closes below 55.83, and then I'm not going to get rid of it all till it closes below 53.75. So that's how the rest of the SPXU is going. FAZ is also a 25% sell with a close below the 10-day moving average and 50-day moving average today. SQQQ, a close below the 10-day moving average, is also going to be a 25% sell. SRTY is still trending above the 10-day moving average, and SOXX SOXS is still trending above the 10-day moving average, so no 25% sells on there. I sold 50% of all my hedges in the morning. If you did not, and let's say you only sold 25% of SPXU, then you can increase that to 50%. If you only sold 25% of SQQQ, then you could increase that to 50%. I don't recommend it because this bounce is beyond lame and oversold. And one of the biggest definitions of oversold bounce is almost every stock in the market rallies on no volume. So I have a high price stock scan and a high price growth stock scan. One has 111 stocks in it. 100 of those were up. 82 of those were up on below average volume. I have another scan of 144 stocks. 128 of the 144 were up. Out of the 128, 101 of those were up on below average volume. That is a definition of an oversold rally. Every stock rises on below average volume. So we'll see where we take it from here. I'm actually rooting that we can rally a little bit more, and maybe we refail the 50-day moving average with the S&P 500. Maybe we fail at the 50-day moving average for the NASDAQ and Russell 2000. And if that's the case, I'm going to hit this market hard. Until then, I did have some triggers tonight. JLL could have been a possible long. Arithmetic chart I didn't like. Kim, same thing. GT, that was better, but still I think GT just wasn't solid enough for me with the earnings might be coming up or something like that. I think really it's that chart pattern. It's a little bit sloppier than FDX. FDX, you can see on an arithmetic chart pattern here, much tighter, and the pocket pivot point is coming right off the support lows. Very low risk entry area. Right now I'm paying attention to this where I normally wouldn't in an uptrending market. But MACD has crossed above the moving average line. TSV has crossed the moving average line to the upside. Pocket pivot point signals, only one pocket pivot point sell signal in between those two signals, and it came on a flat day that appeared to be support in the overall stock. So that is not a severe pocket pivot point sell signal to me. So it looks like we have a good signal here. 5% of the account capital, because we're dealing with high quality stocks, I'm not afraid to push it. There's not much risk involved, so you need to risk a little bit more to get the gains. If we're wrong, it's not going to hurt our accounts. So 5% position in FDX, just like 5% of the account capital went in PSA yesterday and 5% went into XEC ad.